Section 26 of the Companies Act 2013 deals with the matter to be stated in prospectus. Definition: Section 26 prescribes the information disclosure reports and declarations that must be included in a prospectus issued by the public company when inviting the public to subscribe to its securities. The objective is to ensure the investors receive complete and accurate information before making investment decisions. Okay, in the simple words, before a public company raise money from the public, it must issue a prospectus containing all important details about the company, its business management, financial positions, risk, and a proposed issue of securities. Section 26 ensures transparency and investors' protections. Objective of Section 26: ensure complete and accurate disclosure, protect investors from misleading information, ensure transparency in capital raising, impose liability for false statements, and treat public offers fairly and unfairly. Okay. Section 26, subsection 1 contents of prospectus. So here, every prospectus issued by the on behalf of public company be dated, be signed, contain information and financial reports as specified by SEBI in consultation with the central government. General information: name and address of the registered office, company secretary, CFO, auditors, legal advisors, bankers, trustees, underwriters, other prescribed persons. उसका जनरल इंफॉर्मेशन अवेलेबल होना चाहिए. फिर उसके बाद से इशू डिटेल, opening and closing date of issue, declaration regarding allotment and refunds, authority for issue or and board's resolutions. फिर उसके बाद से आता है procedure and time schedule for allotment. Financial informations: separate bank account for issue proceeds, uh, utilized and unutilized funds from previous issues, auditors' reports of financial statements and prescribed reports. Capital structure: existing and proposed capital structure, minimum subscriptions, premium payable, and issue of shares and otherwise than for cash. Here's a declaration is very important. The prospectus must contain a declaration that the provisions of the Companies Act have been compiled with the nothing in the prospectus is contrary to Companies Act 2013, Securities Contracts Regulations Act 1956, and SEBI Act 1992, and the rules and regulations made hereunder. Okay. After that, business and project informations. Main objective of the issues, main business activities, project implementations, schedule and locations of those project. ठीक है. फिर उसके बाद से आता है रिस्क फैक्टर्स, मैनेजमेंट perceptions of risk, gestation period of project, and progress made in the project, completion deadline, and pending litigations against promoters during the previous 5 years. Okay, and financial reports required. Auditors report profit and loss information, assets and liabilities. Others prescribed financials. 5 years financial information. Reports relating to the preceding five financial years. If the company is less than 5 years old, reports for all completed financial years since incorporations are required. Reports on unutilized of funds. Information regarding business or transactions for which issue proceeds will be used. ठीक है. Section 26, subsection 2, exemptions. The provisions of the section 26 do not apply right issue. Issues of shares or debentures to the existing members of the debenture or debentures holders under section 62 or uniform securities already listed. issues of securities that are identical to the securities already listed and trade on the recognized stock exchange. Section 29, 26, subsection 9, penalty. If a company issues securities without complying with the Section 26 requirements, penalties may be imposed under the Companies Act 2013. Features of the Section 26 investor protections provides complete information to the investors before investment decisions. Transparency ensure disclosures for all the material facts. Risk disclosure requires companies to disclose project and business risk. Financial accountability mandates audited financial information. Regulatory compliances ensures adherence to Companies Act and SEBI's regulations. Advantage of the Section 26: better investor decision making. Investors receive detailed company informations, increased transparency. Companies must disclose material facts, reduce fraud risk. Misleading statements can attract liability and strong market confidence. Promoters trust in capital market. Accountability of management. Directors and promoters become responsible for the disclosure. Disadvantage of the Section 26 is extensive compliance requirements, high higher cost, time consuming, and risk of illegal liability. And now we can see that how prospectus ensure transparency and protections. First, company decide to raise the funds from the public. Then, prospectus prepared as per Section 26 requirements, information, financial risk and factors, and declarations included. Offered to the public through prospectus. Investors make informed decisions. Transparent capital rising and investors protections achieved. Okay, these are the hierarchy how prospectus is issued. Section 26 ensures that no material information is hidden from the investors and every public issues is based on the full and fair disclosure. The key takeaways of this section is the cornerstones of investor protections in public issues, transparency today, trust forever. Thank you.